Hey, Eric here from 5minuteinvesting.com. And today we're going to talk about what is value investing. Now, this is a common topic and I know a lot of people have done it before, but most people make it way too complicated. And I'm going to try to explain value investing in less than 10 minutes or so. So here I have a very simple graph. And when you look at value investing, we're investing based on value, not price. And that's basically the key distinction. So the first question in value investing is, what is the value of the thing you're investing in? Now, whether that is a house, a car, a stock, or cryptocurrency in certain cases, what is the value of what you're investing in? And it might be $10, it might be $5, it might be whatever. So in this case, let's make it $10. And the whole point of value investing is to try to buy something at a discount. So the value of something is not necessarily the price. So the price can fluctuate. It can go up and down and so on. It can go crazy. It can do whatever it wants. The price can do whatever it wants. But the value is how much the stock is worth to you. And it might be different for different people because, my investment horizon is different, or my background is different, or, something that is worthwhile to me is not worthwhile to you. So there is a level of subjectivity, but the price can fluctuate above and below the value. So when it is below, what do? You try to buy it. And when it is above, you try to sell it. Or sometimes it is at par with the value, and you can choose to keep it or sell it. And it's really that simple without making it too complicated. So then the question is, well, I can usually see the price. That's just what the stock market price is. How do I get that? How do I get the value? And naturally, if you have been studying value investing for a while, the first reaction is to, let's do fundamental analysis. And that's really complicated. A lot of people get stuck. Of course, I teach fundamental analysis, but here's a very simple way to look at the value. So let's say you're buying a house, and the house, you're going to own it for 10 years, and at the end of the 10th year, the house will randomly be destroyed, and you don't get anything out of it. So you have this house lasting for 10 years and randomly destroyed. And every year, you get $1 of rent for 10 years. So how much is the house worth from a financial perspective? It'll be $10, right? So because that's all you're getting in 10 years. Now, you might discount a little because the last dollar you're getting is 10 years in the future. Basically, it's a time value of money. But essentially, you shouldn't pay more than $10. And hopefully, you're able to wait for the price to go down, so then you buy it at $5. And that's value investing. You find out what the value is of something in the future, and then you buy it at a discount. And it's that simple.